Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, July the 14th, 2025. U.S. stock market has been closed for about 25 minutes. I'm not going to be real super long in this podcast. I'm going to try and get it posted online as quickly as possible because I tell people, check the website around 30 minutes after the market closes on Monday, and we'll usually have this up there. I'm going to be a little bit late on that today, so for that I apologize. I got to tell you, I absolutely loved the market move today. Not because it was anything real big, not because it was anything real spectacular, but because the markets showed the ability to shrug off the tariff talk. And I get frustrated. I mentioned this back in Donald Trump's first term, back when he was president between 2017 and the end of 2020. I used to get so frustrated with the timing of announcements. I still do a little bit. I make no secret of that. I used to get frustrated with, why did this is, I don't mind that he's doing this with these tariffs on this country, but does he have to announce it until it's all a done deal? And I hated the way the markets reacted to it. What bothered me, whether up or down, I just hated seeing how the markets would so often overreact to the news. So, last week we had what I felt was kind of an overreaction on Friday to an otherwise really good week. I think the Dow, had a pretty good sell-off from where it finished the day before. The NASDAQ, the same thing. The S&P not quite as bad, and none of these were massive ugly movements. They weren't the big super ugly movements that we sometimes get, but I still didn't like the fact that the markets were reacting to the news of tariff stuff. And then over the weekend, we got even bigger news on tariff stuff, bigger tariff percentages being levied at some countries. And I would not have been shocked if there would have been a really big overreaction today as well. And there wasn't. And I was really glad for that. Now, going back to last Friday's reaction was not a massive overreaction, in my opinion. It definitely, the markets reacted negatively to the talk about tariff stuff, but it wasn't as much of an overreaction as it has been sometimes in the past. And I do like the fact that the people that have significant amounts of money under their management, this is not always retail investors like you and I, this is hedge fund managers, brokers, registered investment advisors with big portfolios. They seem to be finally starting to get it. Now, I want to be careful saying that, because just as I say that, there might be an announcement from the White House or from the president specifically that creates another big overreaction. But it feels like they're starting to get it, and they're starting to not react quite as dramatically as what they did, 4 to 8 years ago, and even earlier this year. The reactions seem to be very overblown, and I'm grateful that seems to be tempered a little bit. And this headline right here, to me, kind of summarizes the why part of it. S&P 500 posts slim gains Monday as traders hope for lower tariffs before the August 1 deadline. So part of the announcement that came over the weekend was, in fact, we're going to impose these bigger tariffs beginning on August 1st. Well, it's like people are finally figuring out that's what President Trump says when he wants to get people to the negotiating table, and he wants them to move and do something prior to a certain date. So little drip by drip throughout the day today, you did get word from some different people, not the real high ranking people that you might want to see it from, but we did get news from some people in the administration or close to the administration that were saying, look, we've already got a number of countries that are coming to us and saying we want to, or we will get something done before August 1st. The president of Mexico, Sheinbaum, I think is how you say her name. She came out, I think even before the markets opened today. I think she made the announcement yesterday. She said, we are working with the U.S. We are going to get to a deal with the U.S. that everyone is happy with before August 1st. So it's like even these world leaders that occasionally take these real, they hear something that Donald Trump is going to do, and then they try and take a real power stance against Trump. They try and say, well, we're going to retaliate, we're going to do this, we're going to do that. And then it's like they say those things knowing full well that they are not the ones holding the cards, that they are not the ones in a stronger power or stronger position to be able to negotiate for themselves. They're going to negotiate, and it's going to end up being in favor of the U.S. And they know that, and they recognize that. And it's almost like, at least on the part of Scheinbaum, there was kind of the admittance to that. Now, in the backdrop of that, you've got the stuff going on with the country of Brazil right now. Brazil poses an interesting situation because they are not in a position of power, and Brazil is going the way of the UK and some other places in Europe where they are squashing free speech. They are trying to put down people who don't agree with everything the government is doing and who want to have a voice in that. Brazil is allegedly a democracy and should have free speech, or they claim to have free speech. So Brazil's kind of a different story. There's different reasons why the tariffs on Brazil, and for their president to come out and say, we're going to reciprocate him. Let him whine, let him cry, let him say what he's going to say. At the end of the day, the Brazil needs the U.S. way, way, way more than the U.S. needs Brazil. I got nothing against the country of Brazil. I have friends that are from Brazil. They're U.S. citizens now, but they came here from Brazil. I have friends who have lived in Brazil and spent a lot of time there. I have nothing against Brazil at all. But their government is being kind of, jerks, and President Trump is calling them out on it and saying, look, in this case, we're going to use the tariffs not so much for this perfectly fair trading field. We're going to use it as a way to punish you until you come correct on the stuff you're doing. So I don't know. I don't know if I personally agree with that and love that Trump is doing that. I kind of sort of wish that maybe other financial injunctions were being used. Injunction is not the word I'm looking for, but that other financial things were being imposed on Brazil. I don't know if I like it necessarily in the way of tariffs, but I'm in my mind, I'm just willing to bite my tongue a little bit and see how it plays out. Not that I can affect it in any way, but I do have an opinion on it. All right. So anyways, glad that the market's moved up. Now, the remainder of this week, we've got a lot going on this week. CPI data comes out tomorrow. PPI data comes out on Wednesday. And then you've got in addition to jobless claims, you've got retail sales, Philadelphia Fed, import-export prices. You got a lot going on this week. And, hopefully, my hope is that these reports are all kind of in sync. And what I mean by that is I hope they're all telling the same story. I hope each one of these reports that comes out is kind of leading to the same story, that the economy is either in good condition or moving towards being in better condition, and that inflation is in check. There's still worry that some residual effect of the tariffs could create inflation. So far, that has not been the case, but that's not to say that it couldn't happen. It absolutely could, and we have to keep a close eye on that and be very careful. There's the ongoing battle with President Trump and with Fed Chair Powell, Jerome. And, we'll see if anything new happens with that. But it's really CPI and PPI data have the ability to move the markets. I'll tell you right now, if CPI data, the expectation is 2.6 for month over month, or 0.3 month over month and 2.6 year over year. And those are both a little bit higher than what last month's numbers were. I would rather see that the consensus is it's going to be the same or lower than the prior month. But as long as the number comes in at or below what the consensus expectation is, I think you're going to see the markets continue to gain steam and continue to push to new all-time highs. If those numbers come in higher than 0.3 for the month over month and higher than 2.6 for the year over year, you could have a repeat of what we saw last week Friday in a sell-off, and we'll see whether or not other things going on. I don't know what specifically those other things might be, but we'll see if other things could overcome that kind of data or that kind of news. So we'll see what happens. And of course, the PPI stuff on Wednesday. All right, let's talk about the new trade that I sent out. I'm going to do this in this order. I'm going to start with triple play. I don't have any of them in the spreadsheet right now. Excuse me. But we sent out new trades for JP Morgan, who reports tomorrow before the bell opens the markets, and Johnson & Johnson, who report later this week, both long iron condors. And then I sent out a Netflix long iron condor that didn't even come close to getting filled. I sent it out before the market opened. Did not even come close to getting filled. I may come up with a different trade as we get the CPI and the PPI data. I may go with just those two trades. The reason I wanted to go with the triple play stuff first is because I don't do this very often. And those of you that are members of Safe Option Strategies main program, as well as you're part of the triple play program, I don't want you to get worried that you're always going to get a repeat or that the things are going to overlap too much. But on this particular week, I did not see a trade that I liked better than this Johnson & Johnson long iron condor. So I actually used it for both. I used it for one of the triple play trades this morning, and I used it for the main Signal newsletter trade. Don't worry about that happening very often. I think that's only, since we started the triple play program, I think it's only the second or third time that we've done that we've overlapped a trade for both of them. And again, it's for no other reason than I just didn't see another trade that I liked better than that. The numbers were fantastic on the Johnson & Johnson trade. In fact, if these numbers held tomorrow and you could get in the trade around 166, 167, maybe 170, I got in this morning for 175. Now, one thing I want to make really clear to Safe Option Strategies members who are also a part of the triple play program, I would not double up on this position. I might, if I was a member of both programs, I might do a few more contracts than I might normally do. That's just me. I'm not suggesting you do that or recommending that, but I am recommending you don't double up on the number of contracts that you're putting on so that you can kind of run it almost as two separate trades. It's up to you. I can't control whether you do that or don't do that, but I'm certainly not recommending it. In fact, I would recommend against it. But I like this trade, and let me tell you really quickly why. We set the expiration for this trade out in not this coming Friday, but next week Friday. So we've got the July 25th is the expiration date for this trade. That means we've got, from the time Johnson & Johnson reports, which I believe is Thursday morning before the market opens, we've got all of Thursday's trading, all of Friday's trading, and all of next week for Johnson & Johnson to either get back up here where that's where they're going to test their first real level of resistance if they get a good report and get a move to the upside. We only need them to come down to right about here, which, granted, there's a little bit of support they'd have to break through right here at 155. But if they have a bad earnings report, if they report weak numbers, weak guidance, I think they'll blow through this support at 155 and come right down here to 152, or even the stronger support to me is down here around 150. So I believe Johnson & Johnson, they've been in a pretty stagnant range since their last earnings. But remember, their last earnings actually shot them up initially before they kind of flattened out. And that's all we need, is kind of a move similar to what we got, up or down, a move similar to what we got on their last earnings, which I think they'll give us. So I'm optimistic about this trade, and I like it. And I feel like I gave us plenty of time to adjust. And if Johnson & Johnson reports and they get really stuck hard right here at 157, they get really stuck hard right here at 155. If they report good or bad and it just doesn't look like they're going to really move anywhere, this is a trade that I think we'll bail out of pretty quickly and not take a big loss on it. I'd rather, this is one of those few instances where I'd rather take a small loss and get out of this one quickly than stay in it and try to adjust it and manipulate it and be in it for too long. So that's the plan there. No adjustments to any collar trades this week. I held off on making an adjustment to CoreWeave, and I'm glad I did because CoreWeave had a pretty big move back to the upside today. Now, that said, they're not profitable right now, but they were down a lot last week on Friday. They got a lot of that back today. And this is a longer term trade, so I'm not terribly worried about CoreWeave. I think Friday's sell-off on CoreWeave, I think, was a very exaggerated sell-off. And even though they didn't finish today at their session highs, I really believe that this one and only support level right there, it was prior resistance. I think now it's acting as support. They bounced off of that on Friday and they didn't come down and test it today. I think that's good news for CoreWeave. We'll watch them for another day or two, but there's not an urgency to adjust on this, even though that's been like an ugly 2 days move down on Thursday and Friday of last week. I'm not overly worried about them, and I'm not worried that they can't make a run back to the upside very quickly. CrowdStrike, all day long today, I rooted for CrowdStrike. I wanted to see them come back up. They came a long way off of their lows, and that tells me that maybe that test of support right there, which was some resistance right here, some resistance right here, some support right there after they broke through, kind of tells me that that support may have held. I wish this would have finished in positive territory instead of negative territory. But CrowdStrike, I think, has been very unfairly beat up with a couple of moron analysts that are downgrading it. I don't think there's a justifiable reason to downgrade it. I've read the reports. I've read what they're looking at and what they're talking about. I think CrowdStrike is going to be fine. Doesn't mean we might not make an adjustment to it within the next day or two, both for our SOS spread trade as well as our triple play trade. We rolled it out last week on triple play. I think you could see CrowdStrike build on the momentum of moving off this low. Believe it or not, I see that as some momentum to finish up towards their session high. Not quite in positive territory, but not a real big deep drop today. And I think they might build on that tomorrow morning and start to move back up a little bit. If not, we will not wait past tomorrow to adjust. The triple play trade, we probably adjust it into a bear call spread and let it expire at the end of this week. The Safe Option Strategies main signal newsletter trade, we probably take that CrowdStrike trade and do a pretty dramatic adjustment to it in the way of rolling these 510 short calls down to something like a 480, moving them into a nearer term expiration, and then probably adding a bear put spread to the trade. It's not all a guarantee yet. It's kind of what I'm leaning towards. So keep an eye out for that. We're really far out in time on both of these trades, and that's part of the reason that I didn't want to jump the gun and do an adjustment too quickly. Now, there are a number of spread trades that are collar trades that have options that expire either at the end of this week or at the end of next week. They will all get adjusted sometime this week. I've got several there at 725. I got a couple with a 718, which is the end of this week. All of them will get adjusted this week before the close of the week. So I'll keep an eye on that and make adjustments to those as necessary and just watch for that. Last thing before I finish today's podcast. Tomorrow, when the markets close, I will be on the road. I will be driving to California. My oldest daughter is going to have a baby any minute now, and it's her first one. And it's been a challenge for her and her husband to get this far. So we're super excited for them. We've been on pins and needles through this entire pregnancy. We are going to be there. If she doesn't deliver tonight or tomorrow, they are going to induce her on Wednesday. So we know the baby's going to come no later than Wednesday. So my wife and I are going to be in California with my daughter and her husband for a couple of weeks. That's why we're driving out instead of flying out. And that means that I will not be able to do a podcast tomorrow. So here's what my plan is. Or excuse me, I won't be able to make adjustment. I'm sorry. I will do the podcast tomorrow morning because we're not leaving until around noon my time. So I will do a podcast tomorrow morning, 30 minutes after the market opens. What I meant to say is I may not be able to send out adjustments tomorrow for Wednesday morning's open, but I will be able to get up very early on Wednesday and send adjustments if needed. So nothing is going to be different except that some Wednesday morning adjustments might not come until Wednesday, a couple hours before the market opens. So I need everyone to know that so that you can watch your emails and check the website on Wednesday morning. Usually I tell people that if you don't get adjustments within a couple hours after the market closes on a certain day, we're probably not making adjustments for the next morning. Tomorrow and Wednesday morning is going to be the one big giant exception to that. I will absolutely unequivocally send out adjustments, but they will be early on Wednesday morning instead of in the afternoon on Tuesday tomorrow, because it's about a 10-hour drive from my house to my daughter's house, and we're leaving like it's 12:30, 1 o'clock my time. So we're not going to get into the San Francisco area until 10:30, 11 o'clock San Francisco time, and I might be dropping my wife off at the hospital on the way there, on the way to my daughter's place. So keep that in mind. All right, I'm going to wrap up right there. Have a great rest of your day, everyone. Thanks. Bye-bye.